Hi, this is Kim Watson of Easy Trader. Welcome to a midweek review. In this review, I'm going to be looking at supply and demand levels. Before I do so, just a couple of things for housekeeping. Firstly, you may have noticed that we're actually using a different mail provider or email provider. What's happened in the past, we've had 2 or 3 systems where your emails are being captured. You've opted in for some newsletters or whatever, however you've opted in and joined us. And from that point of view, we've been using, at one stage we were using one system, we changed systems later over the years into another system, and effectively we've ended up with 2 systems with 2 lots of people on them and quite a lot of duplication. So some of our clients have been getting 2 or 3 emails running through them each week, or each time we send one out. So what we've done is we've merged the systems, hopefully merged the right email addresses through to them. Now we do realize that some of the systems weren't sending the emails out particularly well, so this may be the first time you've seen an email for a long time from us. I do apologize if you missed these in the past, but we do try and get updates out Monday, Wednesday and Fridays in the main of educational content and obviously market review. So we've also got, so that's one thing, so we've merged the systems. So please also note that our email address is news@easytrader.com for these emails, but you'll see, or certainly on Gmail and on Outlook, you'll see Infusionsoft.com on behalf of Easy Trader or something in those lines. If you look at the email, if you can white label it, it'd be great because it will save it running into the spam at any other time. So that was one thing. Second thing is we've launched a little service. We have ad hoc data and things that we want to share with our clients. Sometimes we share them in the trading room, and not everyone is in the trading room when we share them. There's other things that we share that we would like to people miss the emails, and we want to provide a sort of almost like a library of it eventually. But we've launched a service as of yesterday. We mentioned it. We sent an email out. Now we appreciate many of you may have clicked on that. Well, we know many of you have clicked on it because we can see it's being clicked on. So thank you for joining us. We will be sending some snippets out. Now, some of the snippets may be video content, other may be just written. So it will be a bit of a mixture of what's going there, so you can build your own library of what's actually going out there. Some of the things won't be suitable for everybody because some of them are a little bit simple, basic, but we do have quite a wide range of people within our trading community. So there will be basic lessons, there will be lessons that are more advanced. So I'm sure they'll all fit different people at different times, and sometimes just running through. I mean, this supply and demand section I'm doing for this video is relatively simple, but it goes into a little bit more detail than perhaps you would normally go. And then there's something I could actually show you how you can profit from these using these supply and demand, which I'll probably do as one of these articles on the new service. So if you want the new service, on the email that you've received from here, there is another chance. If you haven't clicked on the email that you received yesterday, there is another chance just to click on, and there's a new service. If you just click on it, it'll automatically register you. So we won't send those things out to everybody. We don't want to fill your email accounts. We realize there's been a few emails gone out late that aren't of our type, because we've got a marketeer working with us. And so yes, enough said. So we will be sending these out nice, clear, our normal style of education. So if you want to subscribe to them, as I say, the link is on the email address. So that's 2 things to remember. Infusionsoft will be our although it'll be news@easytrade.com, it'll be on behalf of news@easytrader from Infusionsoft. If you could just white label that in your systems, if you know how to. That's one thing. Second thing, if you want the new service, just click on it and we'll be sending extra snippets. Now these may come 1, 2 a week, may come 1, 2 a month. We don't know really how frequent they'll be sent. It's just as and when. At the moment, quite often it's like this video. If someone's waiting for a review on the markets, it's going to be 15 minutes probably in before I get there. So we can split things up a little bit easier that way. Right, let's get down to the business then. So supply and demand levels. Now what are they basically? They're support and resistance effectively, because in basic terms, when you've come up to a point here, if there's plenty of supply coming into the market, the price will no longer go up, price falls. Likewise, when you come down to the lows here, if there's if demand is coming into the market, people wanting to buy, that provides support and price starts rising again. So very, very simple terms, but possibly oversimplified in terms of just simple lines here. In fact, what I've done here is I took the spike that we had from the 18th of March there, just took that spike that was from the FOMC, the Fed meeting, had a spike running through there. Now I've then just sort of drawn the line from the spike. I also looked at the next sort of level here, which came in and popped a line on there. So I've got a couple of lines. These are traditional lines. Now they work to a degree, but there's a few things I've noticed as I've been running through the markets and trading with the markets, and it's a case of obviously around about this area there is some sort of there's more supply than there is demand when we reach these levels at the moment. Now I'll just run forward a little bit right up until present day, and you see it's running right the way across there. Now what I've been doing, and I've been doing it on the video updates more recently, I've been drawing ranges. I found a new tool in eSignal. That's always a good thing, is when you find a new tool. I found this little it's a tool up here. It's a rectangle, and it just gives me a nice rectangle. You can see exactly what's going on with it, and all I do is I draw it from the high down to the collar of the next high, or this sort of area here. It gives me a bit of a range where I can see price running into, and then when I look at that range, if I can bring that back there, and if I extend it right, you'll see that each time it comes up into this area, well, there was and potentially still is supply levels, and there's plenty of supply running into these areas, and every time it gets up there it fails from there. Now a couple of observations has been running through that. There is a reason why it does it, but you might have noticed on a couple of events you get these patterns here. You're getting this lower high in the middle, and then it runs up. So you've got a high, a lower high, and then it goes into a higher high situation. So you've got it there, and you've got it high, lower high, higher high, and it's off. It's gone and failed again. So it's running to supply, but it just gives us that I'm going to talk about, I think, on an additional. So if you want to know more about that, and also how to trade and make some profit out of these, or a example how you may make some profit out of those, that will be in the video update. Sorry, on the updates for the guys that want the extra snippets, because I can spend a little bit more time writing about it or videoing it. But for now, the important thing was really to go through these instead of just absolute resistance, as this is. It is a supply area, or it's a resistance area, so there's points of resistance. And quite often I started, as I said, using this rectangle tool, because if you just you get the spikes, and this may have just been a spike. I mean, obviously plenty of supply being, oops, actually didn't want to do that, plenty of supply coming into that level. As it ran up there, it started, and it sold right the way back to where it was. So there's often supply coming into these levels, so watching them on each occasion. So what makes the supply, and how I thought, well, I'll just go a little bit. This is supply. Demand is opposite, absolute opposite. Now, what we got on our website, Easy Trader website, you can, on the resources, you can go down, and there's a Forex order book, which is this page here. Now this will give you, I mean, this is the pound dollar. We can put the euro dollar on, choose which currency we want to look at here. There we go, euro dollar, and it will show you the sell orders, open orders. These are people waiting to sell at these levels, and people that want to buy these, so they've got their limits in above and below here. So there may be stops, they may be limits, but they're orders, open orders. Now this is only one provider, and it's provided by Ianda. Now if you click on the link itself, we can go through a little bit more detail and see the net positions. So it's a euro dollar, looking at the net positions, and we're going to zoom a little bit here so we can see a little bit more detail. And it's probably not going to come too much of a surprise to you, but if you look, and if I can get my little pen ready, in fact I'm going to do this. Look at what we got here, and look at the region. 1.1 to 1.05. Look. Oh, what a shock. Not. So there's supply up there. Now this is just literally on predominantly, I mean it's on Oanda's book. It's a biggish book. But you can see the amount of supply that's sitting at that level there. Is there any shock that is being sitting there, and every time price gets up there? Now there will be a point when this disappears, or when there's sufficient demand to take this supply out anyway. So as price comes up there, the demand will be greater than the supply that's sitting there, and we'll effectively take out the highs there. And you can see that the different levels that we're running through. If you look at the sort of major areas, then on the buy side down here is around about 1.8. Now I'm going to have to lose the pen here. I'm going to pop a little line on at 1.0. Was it 1.08? There's some near term. So there's some demand sitting at there, and when you start coming through, there we go. You saw that demand area before. Now this is obviously near term demand. So we've got to really look at the current chart. But I mean, you can see what's happened here. It was a supply area, and this is standard support resistance levels, isn't it? Really, I mean, but I've just taken it off a chart of looking at the orders themselves and where they sit. So you can see how it can all be put together, and you can end up with these. I mean, these whole areas of just supply and demand areas, as opposed to straightforward lines. It just gives you a sort of warning when things may be rolling over. Now, obviously, if there's not orders sitting there at some point on the sell side, the supply has gone away, and demand will take us through these previous highs here. So there's always likely to happen. And when we come down to the shorter time frames, it's much easier to see where that's happened. If you take this morning, for example, earlier this morning, if we look at this phase, I'm going to draw it on with a rectangle here. There was a phase running through across the tops and the bottoms of the bodies there, where there was plenty of supply at that stage, and there was demand kicking in below. If I pop another little rectangle on there, now that demand may have aligned to previous levels there, but of a glut of supply. But now it's become that you've got this sort of demand sort of region here, but prices are coming in. There's demand around this area here, so it's pushing price back up. It originally was a bit closer, but not so clear, and that's sort of in this 6 o'clock in the morning time, and I take a little bit less notice of it. But as you run through the morning here, eventually, by the time we got to about 5 past 8, the demand outdid the supply, and then we pushed the price up. But you saw it as 1, 2, 3, and it's off the 4th time. Now you see this triple tops. You often see it fail, and it goes all the way, and off it runs. Here it's come up, and this is the stone on the pebble, sort of well, inverted obviously because it's going upwards, but the same sort of principle, where eventually tap it's going to get through, and there wasn't sufficient supply at this level. Demands have taken over, broken that level. Now at some point, and if we extend this to the right without being too clever, there we go. So that earlier morning area that was at one stage oversupplied become an area of demand, and it's just run through there. Prices come back, tested it a little bit, come back, tested towards the lows of it, and this is why I like to use the collars. I say the collars, but the heads of the bodies on there, and you just see it's just come back off that area and off its run again. And then you've got this sort of area of supply this morning, the supply areas. Now, as I say, this is on a 5-minute chart, and you just got to bear in mind that these are obviously weaker than the 60-minute chart or the 4-hourly chart. But again, if I just find my little tool there we go, and we look at the earlier stages here, and the earlier stages could be argued that we're running across here, and there again you've got the same sort of principles. You've got tests into it. Eventually it broke through, but was there that much sort of there wasn't that much. Well, we got a bit oversupplied. There wasn't that much demand at these levels. Got a bit oversupplied, and it's rolled back over again, and so on. Now these levels, obviously, where they come from and where traders put them, they may be stops, and you get these stop hunts. So that it's a case of that you can get these temporary sort of blips through them. So no area of resistance ever is absolutely solid, but you get these pops through them here, and the price then comes back within them. So it's just a sort of a bit of a stop hunt effectively, because anyone that's sold on this point here will have their buy stops here. It's just kicked into the buy stops, into the supply, and rolled over. So there we go. Anyway, hopefully you'll find that useful. Now I'm just going to move on and do a quick review of the markets. Okay, so let's have a look at the euro dollar first. Let's just look through the markets there. And what we've got here effectively going on is a bit of a wedge pattern at the moment. As I said to the guys in the trading room this morning, I'll use my little tool again there. With a lot of these markets, we're running into regions really effectively where we're effectively channeling, and this is where the subject of supply and demand comes in quite useful, because you can see the supply areas, where the supply area is on the top of this channel at the moment, and obviously demand areas where the demand's starting to run up effectively, or come in a bit closer. So as it's doing so, well, maybe if we can get a bit of a wiggle on it, we could break these levels, and we could see it breaking through towards the daily 50 and maybe onwards. But at the moment, it is these rising wedges. If they cannot hold on and we fail out of this, we could be coming back to last month's lows. Certainly a possibility. But at the moment, the way it's almost going sideways, we could end up in this sort of consolidation phase for a while longer. The good thing is there's volatility in this market, so that we've got some points in there. The less good thing for if you're a trend follower, it's a little bit more difficult to get into some of the trades. There isn't always a clear specific trend. That's obviously there isn't a clear trend at the moment, because we're going pretty sideways. So you've got to adapt a little bit to this market. Okay, so that's where we are on the euro dollar. Generally, but the bigger picture is to the downside. We are just sitting on its monthly pivot, and it's more of a bullish zone. If it can hold, well, then we may see the FOMC determine which direction and what happens this afternoon, or this evening, should I say. But we could get a move from that point. So at the moment, it's erring towards the weaker side in this sort of pattern, this rising wedge pattern in a declining market would generally suggest downside, but we'll just see how it is. It may just come back up for just another bite of that towards that daily 50. Looking at the pound dollar, and again, here's the channel I drew on from earlier on this today. It's, to me, it's struggling again. The one thing with the pound dollar is the range is around about a daily range, and it's just literally it's chopping intraday chop that we're seeing here. We could do from a trading perspective for a push out of this. The pound, it's been in a downward trend, and it's the question really is, can it get above that monthly pivot level and start pushing up towards the 50? And again, as I said, this would be a possible deciding factor this evening as the FOMC minutes come out. It may just sort of drive it one way or the other. But if it can push up there, I'll be looking again for the daily 50, and maybe then seeing something a little bit more likely to run up to that monthly R1 area and maybe beyond. Key levels of sort of resistance are just before they again looking at supply and demand. Previously we had supply coming into these sort of levels around that 152 area. So 152 is a psychological number, it's a round number, and everything else may just provide some resistance before we got there. Also, we got the 1.5 area, 1.5 area just above us. So if the price just kicks into here, it may just want to kick back into that 1.5 area and roll over. So we've got to be careful we don't just get trapped into what we believe is a move to the upside there, and it just rolls quite quickly. So look for the momentum, look for the strength of the moves. Okay, so that's the pound. Looking at dollar yen. Yeah, another wedge, more consolidation. Now, as I said this some time ago, and I say it in the weekly, the daily updates I do, the morning updates, is with the dollar yen. We've been sitting in a range which the Japanese are happy with. There's a sort of range between 120, 122 where they're quite happy with the price sitting in there. They used to be the biggest manipulators of currencies in the past. We frown at the Swiss National Bank of late, but the Japanese, or the Bank of Japan, used to regularly intervene in the currency markets quite significantly, and we used to see some really big moves. But of late, they're quite happy where prices are sitting, little in the way of intervention. The yen is sitting there relatively weak, but again, it's difficult for trend traders, where it's a lot easier for to be looking for longs and going, or say longs, but when you've got a market that's running like this over here, when it's running in these sort of phases here and here, it makes it a little bit more difficult. I mean, you've got these huge phases of nearly a month of it running within tight ranges. Now the ranges are reasonable. As I said, volatility in the markets is pretty good, so from an intraday trading point of view, it's fine. You just, the reason I talked about supply and demand today is you just got to look at these areas where you may get the opportunities and the supply may be just coming in, and you can be just looking for the shorts, and where the demand's coming in towards the lows. So there are the possibilities to trade them slightly different, and you can apply that principle to the lower time frames. So dollar yen, let's look at the Aussie dollar. And again, no real shocks. As we're seeing, everything is just sort of more in the consolidation phase. Earning, obviously, we've seen almost time after time of lower highs. We did try and peak up a little bit here, but the supply came in and the price went down. And you've then got demand sitting a little bit more solid around the 75 area now, or 75, 70 area. There was sort of talk in that the Australian National Bank wanted to get down at the 75 area. Could still get down to that sort of region. There was plenty of predicting it will get down to 75, which is quite a possibility. But for now, it's again trying to work its way out of this range, and it's just knocking gradually. If anything, over the last few days, it almost looks like it wants to try and push up beyond and get back into that 50 moving average. You can see how many of these currencies the daily 50 is affecting at the moment, or they're heading towards. Could be a good target on all of them for price to run towards. It's not very far, it's very much in range, and if it can break here, well, then we start looking at the monthly R1s in terms of the pivots. Okay, I will have a quick look at the Canadian dollar, as we tend to trade a lot more, but again, probably not a great surprise here to see it in a trading range. And if I just switch this, I can switch it to, I've got it here. If you can just look at the West Texan oil, it's almost an inverted pattern in terms of what you're getting here. So it's the oil price of what's going here, or they've been driving down, and then when you switch back to the Canadian dollar, almost inverted with the lows here. So they are tied. There is a very strong correlation between the two. Now we have had demand coming in at this levels here, around about the 123.81. Now that demand may just drop off. It's tapping there. It's trying to break through there today. It could drop off at this level and continue to the downside here. So remember, this is the Canadian dollar, so it's the US dollar stroke Canadian dollar. So you've got effectively this is the US dollar potentially getting a bit weaker against the Canadian dollar here. Now we see oil push up over the next couple of days. This could easily break this support level. Right, okay, that's it for me. Hope you have a great one. Hope you find the supply demand section useful. Have a great one. Bye for now.